Hello, hello, hello. Happy CPI Tuesday. How is everyone doing today? Sterling putting the numbers in. Good morning, Sterling. Well, apparently genocide being a bad thing depends on context. Oh boy, hey Jacob. Oh, Sterling. Good morning, Patrick. Hey, Amit. Good morning, Royal Palms. So it'll be, plan on sometime right before sometime what's next week starts with the 18th, so sometime the week of the 18th towards the end I'll let you know. Wonder if they'll pump this news up to which news you're referring to, Royal Palms. What else do we have going on? Yeah, the amount of liquidity and hope at current levels is impressive for an economy that is slowing to move historically below trend growth. Ah, that is true, but it's sell vol. It's definitely they were still selling vol yesterday and buying it all. Sell vol, buy it all. Trail mode. Okay, we had the CPI numbers coming in. CPI numbers coming in a bit hotter. Mostly in line, a bit hotter. This was actually, if the inflation rate had been one, what was it? It came in at 3.14, which they round down. If it came in at 3.15, they would have rounded up, which would have been 3.2, but people are focusing on 3.1. Uh, Core inflation coming in at zero point 0.3, so a tick up from previous. Core's not going away. Core four year over year 4%. The market's still, let's buy it, then sell it, to buy it, but the market's still giddy 4% coming in line, but it's double the Fed target for core. And they're still pricing in massive rate cuts next year. There could be some rate adjustments down, but boy, if they started going too rapidly and cutting too rapidly, that's not going to be pretty for core inflation. Still running double the target. And I don't still know why we have a friggin' 2% target. Other than that, what do we have today? Not much. We have, did the Red Book come out? Did Red Book come out? 3.4. Okay. And that's really about it. Now, tomorrow we have the PPI and the big Fed meeting again. It's going to be the press conference. The press conference. Markets today, Oracle, after releasing earnings, down 9%. The mega caps now down, are slightly down. Oil pulling back after its little bounce against the rotation zone. So groups, basic materials, basic materials, real estate, consumer, defensive. So definitely a rotation into risk off assets. Comm services and technology leading the way down. Let me just refresh the Fed Watch, Mr. Fed Watch tool. So back to 4 to 4.25 by next December. So a year from now, back to 4 and 4.25. So 125 basis points priced in. Pause and then the first cut in May. I think the market's feeling a little too inflation not moving yet. It's getting very sticky. Core inflation getting very sticky. Good morning. It's coming back down a little now. You see the quick, well, you can't see it on that chart, but little spike up, hitting the harmonic area, and then the dump. So, but look, overall, look at this. Look at this on the weekly basis. Look how far away from the rotation zone we are. And this has, we've done the 6 weeks up. We're into week 7, and cycles have been pinned at the top. So, what are we looking for today? On any bounce back up, I'm going to see any secondary reaction, how high it can get. Otherwise, I'm targeting choppy to pullback mode. 46.78, 46.79 is the first key resistance. If we do get through there, I will be watching to see how much of this move we retrace. So I will be using the harmonics. And the next target would be about 46.82, 46.81, 46.82. Really key is 46.84.50. So those are the levels. I'm just going to, you can put them up on your own charts, the harmonics from the quick little spike and reversal move with the number print. The bigger levels, we're trading against the 4-hour rotation zone. So if we start breaking down below this low, 46.72, next area that I would be looking at is about 46.61, then right about 46.55, and then major support 46.50. Overbought, but divergence is setting up here, and daily cycles getting back to that top area. So that's where we sit there. It'll be interesting to see how this day closes, and if it closes with a slightly negative bearish pattern. NASDAQ. Hold on one second. I have to raise it up. There we go. So the NASDAQ also spike up to the key harmonic, and then the reversal. Got to take off some of these levels. We'll have to see if we get enough of a pausing bar to even get. There hasn't been major harmonic areas because we're not even getting pausing bars. That's how insane this market is. And this market's like, this is the market I would have expected after we had a decent sell-off and we're getting, towards the end of whatever kind of recession where, hey, let's just go grab everything. Recession's going to be winding down, blah, blah, blah. But now it's like doing it before we've even had any recession. So trading against the key resistance about 16,465. Same thing here. 16,482 is next level I'll be using with this prior little topping area. Then 16,495. Then 16,508. That's how on any rally. That's rally only. And look how far away from that daily rotation zone. So we start breaking down below this 16,442 area. My first target is coming in right at this little mini low from yesterday afternoon, 16,418. And then it's into a pretty significant clear path move on the 4-hour. So then we're down to about 16,375 to about 16,330. So keep that in mind. What are these numbers? Food away from home, 12-month ended November, up 5.3%. Yeah, food away from home is just nuts right now. I mean, I'll make a sandwich at home, drive to the parking lot of a store, and it already got more expensive when I'm eating it in the store parking lot. That's how bad it is. I took it away from home. Oh, yeah. We should be getting a mean reversion, but remember, wait for a pattern. The market can keep trending. That's why I keep saying I'm in trailing mode. Trailing mode from the weekly and daily %B buys. Because I thought it would have stopped before now, but it doesn't matter what you think. If it doesn't hit a trailing stop, you stay with it. Now we get a nice, let's say we were rotate back up and got a 4-hour double top or something, that would give me an area to really get it closer to market. Now going into tomorrow afternoon, we'll definitely be raising the stops. By the way, the Dow futures, let me stress the Dow futures. I have to look at the cash, but the Dow futures above the January 22 highs. New all-time highs in the Dow futures. And yes, this is still a valid massive monthly double top. Might never, ever, ever, ever trigger. But look at the tear the Dow's been on. Look at that. Dow, the major support, is back at 36, about 450. That's really it. The spike level. If it starts breaking down below about 36.8, I'll be watching more for the pullback there. The Russell, the little spiky in the Russell. Let's see where this sits. Let's see. We still have a little potential double top in place, a long way off from triggering. Let's take a look at the shorter term. The Russell, the key support's now coming in right about 1875. Where does the liquidity come from when they say financial conditions have eased? Uh, you still have the reverse repo's been fueling stuff. There's a couple things that have been fueling stuff now, the unwinding of that. Financial conditions also, when they say financial conditions have eased, the yields have significantly dropped. And just look at the 10-year and the 2-year yields coming off of in October. Look at this. Close, we spiked up to 5%, now down to 4.2. This is the equivalent of like 3 Fed cuts right there in the 10-year. In the 2-year, dropping from 5.2 to 4.6 is the equivalent of about 2 Fed cuts. So right there, that's remember Powell saying, when yields were climbing on the 10s and the 2s and everything else, that the yields were doing the work of the Fed. Well, the yields have been doing the opposite work of the Fed now. They've been easing. It's essentially rate cuts. Take that into account too. And then you have, and it's not, don't fight the macro flows right now, because this is where, it gets so interesting with these sell vol funds. You look at the VIX. There is literally, look at the long term. Look at the monthly. Look at where we sit. There is no fear in this market whatsoever. It's sell volatility. That's what's keeping it so crushed. It's sell volatility and then turn around and shove that, so you can sell vol and turn around and throw that money into stocks. And I'm not saying this is not the average investor. There's funds that sell vol, buy it all. That's why I keep saying sell vol, buy it all. Now, if this spikes, they get crushed. But until then, we've had the flow has been up. That's why, this is what the algos and the stuff's programmed to do. You keep selling the vol. Would I be selling vol and buying everything right now? Not after a run like this. But that's where we are. Again, there hasn't been a significant topping pattern. Even if you look at back the S&P, look, we had the sideways correction, holding the rotation zone, and then the roll into March contract. So if you unadjust this, but it's still, if you unadjust it and just look at, because there's the gap also due to the roll. But look at this. It's still sideways, break up. But look at how much, just take a look with this, the 5-period RSI. Look at this. New highs, look at this dropping off. Look at this dropping off. So we're getting some significant divergences here with waning momentum. But it's still trail mode. I looked at the notes. By the way, this spike up with the stuff out this morning sets up just barely a potential double top against the rotation zone, but could take it back to the area of the 50. So needs a close below this key low, 109.31 and a half. So that's what I'm keeping an eye on there. Remember, we're up against the 200 area. So this has gone on quite a run, which we see in the yield. The yield pulled back barely enough for a potential double bottom. So needs a close above 4.292. Could take it back to the 50 and the 37.5 harmonic from this down move. And remember, we're into that very key area for holding. I said we're watching for a bottoming pattern. Now this one might not trigger, but we do have a potential bottoming pattern. The 10-2s, no bear steepening, still coming on down. The dollar index, by the way, the potential double top that never triggered. You see this, it's so far holding the 200 on any dips. The head and shoulders we talked about yesterday with the modified flat neckline has not triggered. So that's still, if that does trigger, watch for a higher dollar. It really needs to start breaking down by 103 before I can turn bearish again on the dollar. Crude with sterling. So this is, remember, I say with the first target from a percent B buy, which was here, is the rotation zone. This is why. So you start trailing, just given other, I've talked about that before. Trailing, then because the secondary reaction now, this has formed the secondary reaction and is coming to double territory. So this still could head lower. We could still connect with the 87.5, but until that happens, we have a potential double bottom. Remember, we still have a magnet price down here, 67.56 area. But this is why you do not ignore the rotation zones for percent B buys, because a lot of them happen against the trend. And I'll tell you what the percent B sells are for stuff like commodities and the modified ones for the markets, which we normally don't go into. I have to change settings. Gold, holding this key level, but still nothing here. We are at cycle bottoms. If this ends with a downward close or a not much bump up today, we might be getting a percent B buy potentially tomorrow setup. Today it would have to close above yesterday's high. All right. And there's not a fantastic, we just have a flagging pattern here. You can see it right here, a channel flag. So where else do we sit? The 10-year yield has a 4-hour trigger double top. I'm watching on a higher time frame. 10-year yield, let me get back there. The 4-hour, yeah, that's still valid. You're looking at this top and this top. So that was very lopsided, but it hit the first and second targets. You're technically the invalidation point now. The invalidation point is a close above 4.237, worst case. It spiked up there, but no close yet above there. But it hit the first and second targets and then reversed. So yes, it is technically still in play. You get the close above 4.237. It's not watching for the third target anymore. But yeah. Good job, Sterling. Spiders. Oh, let's look. Yeah, I'm still waiting. We're getting a pullback now. I'm seeing it hasn't been able to pull back much. I'm still being patient, watching for setups in the yen right now because of no sticky inflation, according to them. Euro, inverse of the dollar index, really trying to spike and hit the 200s. Going to be watching if the euro does turn back down about 107.60 for potential move back down, but nothing great there. The pound, little spike up, but still watching. Nothing to invalidate the remaining target on the double top. The spiders. Gap down, slight gap down, 461.72, so 461.99. First target on any rally, then 462.93, and then 465.30, 465.50 for the major areas on a rallies. Very key support coming in at 459.50. If you're looking for minor support, keep an eye on yesterday's high at 460.75. On any major reversal, 458.30 and then 454.65 area. The Qs. Coming up yesterday, 395.58. Was a key area. We closed at 395.52. The Q's gapping up today. So first thing would be on a rollover would be to 395.52. And then I'd be looking at 394.14, 394 to 394.14, and then roughly about 392. 397.01 is the next key target, and then 399.39 to 461 is the next major area. All right, Tesla gapping down today, still in the consolidation area. Nothing's changed. Breakdown 232, breakout 245.50. Other than that, on a rally, be looking for the minor gap fill, but this is just in no man's land from my perspective right now. Nvidia, as I said yesterday with the rally back up, percent B, worst case would be at the break even, which would be done at this point. Okay, so it's very patient, but this has been turning into a flagging pattern in NVIDIA. So I'm going to be watching more to see if this starts a breakdown and really breaks. You see, this is the pet. So we've had the sell-off, little bounce. If we start rolling back over, especially getting below about 453, watch NVIDIA for a bigger pullback. What else? Hey, Richard. Well, thank you for tuning in. Econ no longer. It will come into play again. It will come into play again. So, I think that's about it for today. Let me just peek into the open. I have. All right, into the open. What do we have? This is very nice. Keep an eye on this. Into the open. Doesn't ever have to trigger. But you get at least a 5-minute close above 46.7850. Could be in for a minor sustained bounce back to where that would sit with the harmonics. Look, that would be straight to that 50. So that gives a potential setup into the open that I will be keeping an eye on. But if it continues to break down, that would be invalidated and there would be no potential double anymore. And then I'd be looking back to about 46.68 area. Exactly what I'll be looking at going into the open. So, all right. Thank you again for tuning in. And remember, be back tomorrow for the PPI numbers. But let's see how the market's setting up going into the final Fed meeting of 2023. And the J Pow press conference to see if he wants to sort of hammer the markets and say it's getting way ahead of itself. Until then, I will talk to everyone later. Bye for now.